America is the largest oil producer in the world. Yet something strange just happened. A new oil refinery is being planned in Texas and it is being backed by India's Reliance Industry. But here is the shocking part. America hasn't built a major new oil refinery in almost 50 years. So the real question is, why does the world's biggest economy suddenly need an Indian company to build its refinery? Because this refinery announcement reveals something most people completely misunderstand about the oil industry. And by the end of this video, you will understand why the United States stopped building refineries for decades, why refining capacity is becoming one of the biggest bottlenecks in the global energy, and why Reliance quietly became one of the most powerful refining companies in the world. And once you understand this, you will see why this refinery project could reshape the energy markets for the next decade. Most people think the oil business is very simple. You drill oil from ground and then sell it. But the reality is far more complex. The oil industry actually has three different stages. First is the exploration and production, where companies drill the crude oil. Second is refining, where crude oil is converted into usable fuels like petrol, diesel, and jet fuel. And third is distribution, where those fuels are transported and sold. Now, here is the key insight. Producing oil and refining oil are two completely different business. Crude oil itself is not very useful. Before it can be used by cars, airplanes, or factories, it must go through a refinery where it is separated into different petroleum products. And these refineries are amongst the largest industrial facilities in the world. Building one requires billions of dollars, complex engineering, and years of construction, which is why refinery capacity is often one of the most critical bottlenecks in the energy industry. Now, here is where the story becomes interesting. Despite being one of the largest energy economies in the world, the United States has not built a major new refinery since the 1970s. For more than 5 decades, refinery capacity has barely increased. There are several reasons for this. Environmental regulations became significantly stricter over time. Building a refinery today requires approval from multiple agencies and can take many years. Second, refinery construction costs have exploded. The modern refinery can easily cost 4 to 10 billion dollars depending on its size and complexity. Third, many energy companies have shifted their focus away from refining and towards other business like trading, petrochemicals, or renewable energy. As a result, many companies simply prefer to upgrade the existing refineries instead of building entirely new ones. But this strategy created a hidden vulnerability because while refining capacity stayed relatively stagnant, oil production kept increasing, especially after the oil boom in the United States. Over the past 15 years, the United States have dramatically increased its oil production. New technologies like the hydraulic fracturing and horizontal drilling unlocked enormous shale oil reserves. This allowed America to become one of the largest oil producers in the world. But while the production surged, refining capacity did not grow at the same pace, which created a structural imbalance. Think of it like a factory producing massive amounts of raw material but having limited processing facility. Eventually, the processing stage becomes the bottleneck. And when refining capacity becomes tight, fuel prices can become extremely volatile because even if there's a plenty of crude oil available, there may not be enough capacity to convert that crude into usable fuels. This is where the Texas refinery project enters the picture. The refinery is expected to be located near port of Brownsville in Texas. The facility could process over 160,000 barrels of crude oil per day. Its primary purpose would be to refine the American shale oil into fuels like gasoline, diesel, and jet fuel. These fuels could then be supplied to both domestic and the international markets. But the most interesting part of the announcement is the involvement of Reliance Industries. And this is what caught the attention of analysts and investors around the world. Because Reliance is not just another energy company, it is actually one of the most powerful refining companies globally. When the refinery project was announced, some headlines described it as a $300 billion deal. Naturally, that number created an enormous excitement. But the reality is more nuanced. The actual construction cost of the refinery is estimated to be around 4 to 5 billion dollars. So why are people talking about 300 billion dollars? Because that figure represents the total economic value of the fuel that the refinery could produce over decades. Imagine a factory that produces goods worth $10 billion every year. Over 30 years, the total output could reach $300 billion. But that doesn't mean building the factory would cost $300 billion. The same logic applies here. So the real story is not about the number. The real story is about why Reliance is involved in the first place. Reliance Industries have built its energy business around refining long before expanding into telecom or retail. In fact, Reliance operates the largest refining complex in the world in Jamnagar, India. This massive facility can process more than 1.2 million barrels of oil every day. To understand how large that is, some entire countries refine less oil than that single complex. But scale is only one part of the advantage. Reliance also built extremely sophisticated refineries capable of processing many different types of crude oil. This flexibility allows the company to buy cheaper crude oils and convert them into high value fuels. That significantly increases the refining margins. Over decades, Reliance has developed deep expertise in refinery, design, operations, and global fuel exports, which is why the company became one of the most efficient refining operators anywhere in the world. The Texas refinery project represents more than just a new industrial facility. It reflects a broader shift in the global energy strategy. For the United States, increasing the refining capacity can strengthen the domestic fuel supply and support continued shale oil production. For Reliance, the project creates a stronger presence in the American energy market and strengthens the energy cooperation between India and the United States. And in the global oil industry, refining capacity often determines who captures the most value. Because crude oil production is only the first step. The real profits often come from the companies that can efficiently convert the crude oil into fuels demanded by the global economy. The biggest takeaway from the story is simple. Energy power is not just about who produces oil, it is also about who controls the refining infrastructure. For decades, companies like Reliance have invested very heavily in the refining technology and scale. And now that expertise is becoming increasingly valuable as global energy markets evolve, which is why this refinery project in Texas may represent something much larger than a single facility. It may signal a new era where the companies that dominate the refining quietly shape the future of the global oil industry.